Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Tuesday, October 15th, 2013. Well, a continuation of the trend to the upside today, and a candle that's made another higher high and a higher low. And that's the fourth consecutive trading day that we've had the market trending up in the first time frame on a bar-to-bar basis. Quite a change of sentiment in this market today, however. We now have a fairly large black body candle, whereas we had three consecutive white body candles to the upside. Today we've seen momentum in net terms shift back to the sellers, and it may be a very important shift with this body being quite large, suggesting that the sellers have come back equally as strong as two of the previous candles that we've seen. The size of the body is commensurate with the size of both of those bodies, even slightly larger than the body of the previous day's trading. But we've also seen the market close down at the low, so we have the sellers taking control of this market away from the buyers, where we saw the buyers in control for those previous 3 days. But also we've seen the market close in a bearish manner down below the 1700 round number level, and that is quite significant that we've seen that occur, and there is a very good chance of this trend technically changing to the downside. So we're looking for a lower high and a lower low, and I suggest there's a very good possibility that the market may test down to the 1687 level of previous support and resistance. For today's trading, the market attempted to trade above the 1709 level that the market tested for the previous day's trading, and only just managed to close above. And it suggested that the resistance there may have been fairly strong, and today we have seen rejection from there in a fairly decisive manner. In terms of the Fibonacci extension, nothing really here to highlight. We saw the market trading in a bullish manner up above the 261.8% level, and now we're seeing the market sell off. So no strong interaction with any of the significant levels, and as I've mentioned, it's not unusual to see markets correct before they reach that 423.6% level. So when we get up above the 261.8% level, and in the manner that we've seen with these very large candles, it really is a good area, or a good probability that the market will exhaust before we reach up to those 423.6% levels. In terms of the Fibonacci retracement, we've seen the market trading in a bullish manner up through the 100% previously, and then today this sell-off, so the market hasn't really interacted with any of the important Fibonacci levels. The next one to the upside was the 161.8% level that coincided with the major high at 1729 roughly. That was at 1727, and here we've seen the market come off, and interestingly finding support around that 100% level, which is this minor swing high at 1696. So we've seen some buying coming in, albeit on a very minor scale, and certainly doesn't suggest that there's a good likelihood of a retracement here down or back to the upside and mark the buyers coming in. There is a possibility of that happening with the trend still being up. So these Fibonacci ratios are still in play, and there still is a possibility of the market trading higher. But with the bears entering this market quite solidly, it certainly does look like there's a strong likelihood of a change of trend to the downside. In terms of the Ichimoku indicators, we have the market bullish in all three timeframes. We're trading above the cloud, so the market's bullish in the long-term timeframe, trading above the Kijun-sen, the pink line here. So we're bullish in the medium-term timeframe, and that Kijun-sen has turned flat, and that increases the likelihood of price action retracing back down towards the 1687, and the likelihood that the trend will change to the downside. So we have a bullish market in the medium-term time frame, but that area may hold as very strong support, or the area around the Kijun-sen and the 1687 level. We also have the market trading above the Tenkan-sen, so we have a bullish market in the short-term time frame, and we have the Chikou span above the corresponding price action. So that's suggesting that there still is some good solid upside momentum in this market in longer term time frame, and supporting the bullishness that we're seeing with the Ichimoku indicators. So considering all of this bullishness and the confirmation from the Chikou span, A likely scenario here is that the market sells off, finds support around the 1687 level, and then we see the buyers potentially come back in around that area, and then again see the market test to the 1700 level, and that will be an important test for the buyers if they do come in quite strongly. Looking at the three candles here, the buyers were very, very strong in this market, and it's likely that any sell-off that we're going to see is temporary, and that would be in line with the strength that we've seen over those 3 previous days. And it's not unusual to see a market that's moved so strongly and so quickly have a bit of a break and retrace to a degree, and then for the that side that was dominating come back into the market. So very good likelihood of the buyers returning. Whether they return now or over the next day or two remains to be seen. All we can do is react to the market, but going by the short-term dynamics on this candle, the sellers have come back here into this market for today's trading. They're in control. It's likely we may see a change of trend and find the market finding support down around the 1687 level.